Eddie Ghabour joining us this morning. Eddie, obvious question, is the worst over?
I think in the near time, the worst is over, Stuart, and it's because of the big transition in narrative and tone in regards to trade. And I don't want to also highlight Scott Bessent being the leader now in regards to the face of trade. I think is very positive for Wall Street in the short term. And we did get bullish and pivot on Monday. We bought Monday, Tuesday, and Wednesday. We aren't fully invested, but that's the first time we went in pretty aggressively because we got a higher low in the S&P, and now it's 3 days in a row of higher lows. Sentiment was very, very bearish. You got some better tones on trade. And so I think we're going to have a little bit of this could have some legs, but it is a trade. We think there's plenty of headwinds in the coming months, but until the trend changes, we'll ride it and then we'll pivot. And this is exactly why we've said this year especially is a year where you're going to have to be tactical to survive, because you have to be ready for any surprises and be able to pivot when the facts and data have changed. And that's what we've done a couple times this year already.
Well, let's see what you think of this. President Trump told Time magazine that it would be a, quote, total victory if the U.S. still had tariffs of 20 to 50% on imports by next year. What would the market think to that? 20 to 50% tariffs still on products coming into the country a year from now?
That will be a critical blow to economic growth. The market will not like it. We will have it repriced. We will break through the lows of April if that actually happens. A 50% tariff is still a significant increase from the 10 to 20% that is happening now. When you talk to corporate America, and we do our due diligence and talk to businesses, CEOs, they're very concerned, and you're seeing that in CapEx spending. Retailers met with President Trump this week, said in 2 to 3 weeks we'll have shelves that are empty. So this is why, again, I think this is going to be a critical juncture that if there isn't any headway with China, you should expect GDP growth to really decelerate quickly over the next 2 quarters. And this is why, again, we are bullish short term as a trade, but we think that the market is mispricing how much growth is going to decelerate over the next 2 quarters unless there's a significant change. And I don't think it's going to be an easy or quick resolution. So right now we are a headlines-driven market. The narrative is positive. Deals will be positive, but we need to see what the actual deal will be with China.
Yeah, I'd love to see them deals. All right, Eddie Ghabour, thanks very much indeed. You have a great weekend, please. Thank you.
Thank you.